Here's what's crazy. While everyone's chasing the latest AI stocks and crypto moonshots, there's a $71.15 billion fund that's quietly becoming the backbone of every serious investor's portfolio. I'm talking about SCHD, the Schwab US Dividend Equity ETF that just hit a massive inflection point most people completely missed. Here's the thing that blew my mind when I saw the latest institutional data. Over the past 12 months, SCHD has attracted $13.42 billion in net inflows. That's $36.8 million flowing in every single day. But here's where it gets really interesting. This isn't retail money chasing trends. This is institutional capital making a calculated bet on what's coming next. It's about to show you exactly why this represents the biggest shift in dividend investing we've seen since 2008. And more importantly, how you can position yourself right now at $27.17 per share before this opportunity becomes mainstream knowledge. Problem agitation. Problem number 1, you're missing the smart money migration. Most investors are completely blind to what's happening behind the scenes. While you're watching Nvidia's daily moves, institutional investors just moved $13.42 billion into SCHD over the past year alone. That's 36.8% million flowing in every single day. More money than flows into most entire asset classes. Solutions? Beginner play. Start with a 5 to 10% SCHD allocation in your portfolio. Immediate strategy? Dollar cost average. $500 to $1,000 monthly into SCHD during market volatility. Advanced move. Use SCHD as your defensive core, 15 to 25%, and layer growth ETFs around it. Problem number 2, you're stuck in the growth trap. Here's what's insane. While the S&P 500 yields a measly 1.2%, SCHD is paying out 3.82% with over a decade of consistent dividend growth. That's 218% more income. But somehow, everyone's still obsessed with stocks that pay zero dividends. Income strategy. Replace your savings account with SCHD for 3x higher yield. Growth strategy. Reinvest all SCHD dividends automatically for compound growth. Hybrid approach. Take half the dividends as income, reinvest the other half. Problem number 3, you don't understand the quality factor. Most dividend funds are filled with dividend traps. Companies that pay high yields but are financially weak. SCHD's secret weapon? It only holds companies with 10-plus consecutive years of dividend payments and 4 strict fundamental screens that eliminate 90% of potential disasters. Solutions. Quality screen. Only invest in dividend funds with strict quality requirements like SCHD's methodology. Diversification play. SCHD holds 103 companies across sectors. Built-in risk management. Professional management. Let Schwab's team do the fundamental analysis for just 0.06% annually. Problem number 4, you're timing the market instead of time in the market. Here's the data that shocked me. SCHD's average annual return since inception has been over 12%. But here's the kicker. After its 3-for-1 stock split in October 2024, it's now trading at $27.17 per share, making it accessible to any investor. Solutions? Split advantage. Use the post-split price to build positions with smaller dollar amounts. Volatility strategy. Buy more during dips. SCHD's 52-week range, $23.87 to $29.72. Systematic approach. Set up automatic monthly investments regardless of market conditions. Authority building. Here's what blew my mind when I saw the institutional data. $71.15 billion in assets under management. SCHD is now larger than many individual S&P 500 companies. $13.42 billion in net flows over 12 months. That's institutional money, not retail speculation. 3.82% current dividend yield with the most recent quarterly payment of $0.26 in June 2025. 0.06% expense ratio. You keep 99.94% of your returns versus paying Wall Street management fees. 103 high-quality holdings with strict 10-year dividend payment requirements. 4 fundamental screens, cash flow to debt, return on equity, dividend yield, and 5-year dividend growth. Average market cap over $70 billion. These are blue-chip dividend aristocrats, not speculative plays. 52-week trading range of $23.87 to $29.72. Currently at $27.17, offering clear entry and exit levels. Here's what institutional investors know that retail doesn't. The Dow Jones U.S. Dividend 100 Index that SCHD tracks requires companies to have sustained at least 10 consecutive years of dividend payments, minimum $500 million market cap, and pass strict liquidity criteria. This eliminates small, speculative firms offering attractive yields only because their stock price collapsed. Professional money managers are betting big on this strategy. As one institutional analysis noted, when we see $13.42 billion in annual flows into a dividend fund, that's not speculation. That's smart money positioning for economic uncertainty and inflation protection. Solution presentation. The SCHD Wealth Building System. 3 proven strategies for every investor level. Strategy number 1, the Income Replacement Foundation, conservative. Allocation is 30 to 40% of portfolio in SCHD. The target is $100,000. Invested is $3,820 annual income paid quarterly. The timeline, build position over 6 to 12 months using dollar cost averaging. The risk level is low. Defensive blue chip companies with decade-plus track records. Strategy number 2, the Growth Accelerator Hybrid, moderate. Allocation is 15 to 20% SCHD plus 60% growth ETFs plus 20% bonds. Target, best of both worlds. Reliable income and capital appreciation potential. Timeline, 3 to 5 year building phase. Then evaluate income versus reinvestment needs. Risk level, moderate. Balanced exposure across growth and defensive assets. Strategy number 3, the Smart Money Mimicry Portfolio, advanced. Allocation is 25% SCHD plus 25% international dividend ETFs plus 50% tactical sector rotation. Target, match institutional level diversification and risk-adjusted returns. The timeline, quarterly rebalanced based on market conditions and flow data. Risk level, higher, requires active monitoring, but institutional-grade potential returns. Week 1 action plan. Open brokerage account with commission-free ETF trading capability. Research SCHD's current top 10 holdings and sector allocations. Set up automatic dividend reinvestment. DRIP for compound growth acceleration. Month 1 execution. Build initial 5 to 15% position in SCHD using dollar cost averaging. Configure quarterly dividend tracking and reinvestment preferences. Study the Dow Jones U.S. Dividend 100 methodology for deeper understanding. Month 3 optimization. Analyze your dividend growth trends and total return performance. Consider tax-advantaged accounts. IRA, 401k for maximum SCHD efficiency. Evaluate adding complementary holdings based on your risk tolerance. Close with urgency. Here's my bold prediction for the next 12 to 18 months. SCHD is positioned to hit $35 per share, representing a 28.8% total return when you include the 3.82% dividend yield. Why am I so confident? 3 macro trends are converging right now. Number 1, the quality premium. In uncertain times, investors pay higher multiples for companies with consistent cash flow and dividend growth. Second, income demand. As demographics shift, demand for reliable income-generating assets will only increase. And number 3, institutional validation. The $13.42 billion in annual flows proves that professional money managers view SCHD as essential portfolio infrastructure. The window for optimal entry is narrowing. We're already seeing the smart money accumulation. $36.8 million in daily institutional flows don't lie. When this strategy becomes mainstream retail knowledge, you'll be paying premium valuations instead of today's $27.17 entry price. Here's what you need to do in the next 7 days. Calculate and target SCHD allocation based on your age, risk tolerance, and income requirements. Then, set up systematic investing to dollar cost average into your position over time. Next, enable automatic dividend reinvestment to harness the power of compound growth. Fourth, study the holdings. Understand what companies you're actually owning through SCHD. And lastly, Track institutional flows. Follow the smart money to see where this thread leads to. The bottom line, while everyone else chases the next viral stock, you can build sustainable wealth with a proven strategy backed by over a decade of consistent performance. SCHD isn't flashy, but it's profitable. It's not trendy, but it's reliable. Your future self will thank you when you're collecting $3,820 plus annually in dividends from a single $100,000 SCHD position, while others are still trying to time the market. This is about building wealth the way institutions do, methodically, systematically, and with a focus on quality over speculation. This content is for educational purposes only and should not be considered personalized investment advice. Please consult with a qualified financial advisor before making investment decisions. Past performance does not guarantee future results. Please like this video and subscribe. Here's to your investing success. Profitable investing.